Most traders spend all their time looking for signals, but the real edge comes from understanding the auction that price is moving inside. Tonight, we're revisiting some of the core TrendForce rules, breaking down real market examples from the past week, and showing you how to spot the difference between acceptance, rejection, and high probability entries. Let's get into it. This is our system PDF. I'm on page 35 where we get into the rules. And so the very first page, and here we go. So the golden rule, guys, this is the rule that governs everything. The golden rule is rejection of tested key levels with confluence. And so I'll say that again, rejection of tested key levels with confluence. And by tested, we mean it's already tested that level. It's not the first time that price is testing a level. It is the rejection of a tested key level. So the second or third touch of a particular key level. And by confluence, we mean trend, space, and signal. So with trend, higher time frame, alignment adds some extra oomph to that particular moment. So does having obviously space between where you are seeing that rejection happen. Hopefully there isn't another cluster of lines within a few pips of where you are hoping to launch from. And a signal. That execution confirmation is a bonus. We know that with TrendForce Pro, we do not need to have a signal. It is a nice extra confirmation. And that's why you'll see even a lot of dad trades, he's sometimes in long before a signal will show up. And likewise for a lot of you guys too, if price is rejecting some levels, you are getting in at the base of that reversal. So rejection of tested key levels with confluence. There's a few more pages here with a little bit more info. So on page 37 right now, called a major shift in trading. So most traders are taught to chase signals. Professional money trades value. TrendForce Pro represents a shift from price-based trading to value-based execution. We don't ask where is price going, we ask where are institutions positioned. Rolling on to page 38, our core philosophy, TrendForce is built on one core belief: volume defines value. We only trade at tested institutional key levels. Entries are taken only when price reaches value and shows acceptance or rejection, never in the middle. And so we've gone over that in previous lessons where, there's been examples of signals that have been present in the middle between a cluster of either volume bands or key levels. And that would be entering smack in the middle. And that is what we would call late in this context. And so acceptance, we've got a whole training on acceptance and rejection, whether price is accepting a level and continuing or rejecting a level and reversing. Next page, 39, we only trade at key levels mapped by our volume bands when price reaches value. If accepted, there we go, continuation. If rejected, reversal. No random signals, no chasing price, only precise execution at value. Rejection of tested key levels with confluence. Rejection is the trigger. Tested key levels are required. The primary confluence being rejection on both the M1 and the M3. Sometimes you might get a rejection of 2 levels on the M1 and maybe nothing on the M3, but preferably having more than one is ideal. And when there's one on the left and one on the right, that obviously adds some extra confluence. And an additional confluence is that trend and that space and the signal. So rejection at value comes first. Confluence supports the entry. Our volume bands and key levels map where institutions execute orders. They act as dynamic support and resistance, not from moving averages, but from institutional volume. So band direction, also remembering like the angle, sloping up aligns with buyers, sloping down aligns with sellers, and sideways, we're then in a situation where we have to adapt and trade the range. And they obviously flatten out later into the trading day. So we trade structure, we trade positioning, we trade with institutions. So I can't see the chat right now, but hopefully you guys are familiar with what I just read, and that's not the first time you're hearing it. Page 42 is now getting into the rules video. This is the 3-minute 10 mark of that video where you can see these examples that Dad is talking through with the M1 chart, the M3 chart, and just talking through these examples of why these were good setups. There's 5 examples in here. So that you've got another one at 6 minutes, another one at 8 minutes, another one at 10 minutes into that video. And then there's a secondary breakdown of the 5th one as well. So guys, I encourage you, go rewatch that video if you need to and bake that rule into your mind, especially the tested part, rejection of tested key levels with confluence, trend, space, and signal. So that I just wanted to cover a little bit before diving into the rest of tonight, because that needs to be so ingrained in us. When you start to think less about being signal driven and waiting for the signal, as powerful as they are, everything about TrendForce Pro gives us the ability to get in long before signals and identify how price is actually behaving at institutional levels where the orders are. So that is, I think, enough for me. I'm just going to check the chat and see. I'd really like to have that more clarified. Okay, I don't know what you're referring to though. How to see the difference between volume trading and price action trading. Well, I'll let Dad answer that in a moment. Maybe we'll come to it in a moment. But essentially, it's not so much just looking at what price is doing, where it is on its own. it's looking at what and thinking to yourself, what are the auctions taking place right now? So that's what we're going to get into, spotting the auctions, and then identifying, looking at those volume bands and asking yourself, like, where are we in the context of those volume bands, whether that be the ones on the session that we're on or the weekly ones, or obviously those other monthly ones too. So I'll let Dad get into the nuts and bolts of answering that, but I do love the question. So Dad, it is your turn. Let me find you.
Here I am.
And add you to this party. And man, just want to welcome everyone else who's jumped on the last few minutes. I can see there Adam, Ryan, and we got Double Dave's going on, Jeremy, Lee's over in South Africa. So good to have you all. Marcus, Paul, Robin, Tim D, good stuff. Wendy, great to have you all with us live. So good. All right. Well, Dad, I'll unpin myself and let's dive into the rest of this evening. Over to you. Thank you.
Yep. Well, before I share my screen, I'll just answer Mark's question. Always a good question. I mean, there's a huge difference between volume. What is your question between volume trading and price action trading? So price action trading is how we were trained and originally brought up in the trading world. So that's how retail traders trade. And they're mainly looking at price action and particularly looking at the trend based on moving averages. So that is price-based trading. So generally, price will move from a bearish move to a bullish move. And 90% of the way they trade is they wait for two moving averages to cross over and to produce a signal. And provided you're with trend, then you enter the trade and you hope that it reaches the target. So it does work, but not all the time. And it is risky because those signals you get normally come a good number of candles after price has reversed. So you never really know what caused price to reverse. Occasionally you may know it may be a big round number or something. So it's mainly based on signals that are mainly calculated off moving averages. But volume-based trading is how professional traders trade. They may have one or two moving averages, but generally volume is basically situated at levels where institutions set their orders. So it could be at the prior day POC, it could be at any one of those significant levels, particularly the volume bands. And so professionals, volume is always off levels where price is off moving average crossovers with signals. That's why, as Ty said earlier, volume-based traders don't wait for signals. They wait for price to test and reject a key level, then they enter a trade. So it's a very different way to trade, but it's how the pros trade. And I believe it's, that's what got me on this whole journey. It was purely by losing money, making mistakes, and think, why did price suddenly reverse? I think I said either at our last live analysis or the last training, I remember once waiting over 2 hours for the 20 and the 50 or the 13 and the 233 to align. And I thought I've waited 2 hours in alignment. I pressed buy. I think I got up to 20, pullback stopped me out for one after 2 hours of waiting. I had no idea why that trade didn't go because I was trained to really trade off moving averages. So I don't know if that answers your question, Mark. That's basically the big difference. So we've shifted from price-based trading, emphasizing signals and moving average crossovers to looking at key levels. So let's do that tonight. So Ty, I'm going to click share. Here we go. So I've made a page of notes. I've looked at just over 2 days. So here, this may not be clear, but I've made a whole lot of notes. It may flash on and off. Anyway, so I've picked out a few things just to look at really, spot the auction, looking for auctions. And I thought I'd have to look back over days and days, but I'm just going to look over 2 days on the Dow and the NAS. And then if we haven't run out of time and if we've run out of questions, then I'll maybe look at gold and look beyond that. So I thought I'd start with the last two trades I took of the week. So I'm going to look at the Dow. So this is the Dow at the 3 minute. So I'm not going to split my screen for this. I always trade with a split screen, or I put the 3 minute on my monitor if I'm looking at one. Anyway, maybe I should say how I do trade. I look at the Dow and the Nasdaq every single day, and then I take a look at what is more likely to produce good signals. If they both look the same, like Saturday, they were identical almost, then I trade both the Dow and the NAS. I split my main screen into the 1 and 3, and then on my monitor, I put the NAS. If one looks very rangy, then which I prefer to do, is then I'll use my whole computer screen. I've got a nice big IMAX screen for the 1 minute, and then on the monitor, I put my 3 minute. But let's quickly go back to Saturday morning. So I don't even need to use because it was so recent. And I like to also, when I'm talking about training like this, oops, I've gone all the way. Have I gone to? I should have put my date in. That's Friday. Let's go to Saturday. Here we go. So this is Saturday morning. And also, when I give training, I also like to say how I think, how I prepare for trading. So it'll be more than just looking at signals. So I'm going to put the replay function so we can get all the key levels up on the screen. And here we go. So the way I also prepare to trade, I never just, well, maybe I did it when I was an inexperienced trader. I never just turn on the charts and press buttons. So my routine is, if I'm trading in the morning, which is, the majority of the mornings in a week, I'll always look at the charts in the late afternoon. So often my wife will bear me out. I'll say, I'm just setting up my charts for the next day. And then I look at the Dow and the NASDAQ. And then I look at obviously the 1 minute and the 3 minute. I change the 1 to the 4 hour, the 3 to the daily. And then I look at the key levels. And I get some idea of what price is doing. So when I wake up in the morning, I would have maybe some idea of what I think, could play out. And so what didn't mean to highlight my Saturday trade, but when I looked in the afternoon, what did I see? So if I just go back, let's go back to the late afternoon. So normally, 4:30, around 4 o'clock, I looked at the charts and I looked at the 3 minute, and obviously what caught my attention was the weekly is overbought. So, I mean, this band here is the weekly overbought band. So price in the week had gone way above the overbought band. So I was hoping it would stay like that, because there are times, nothing, remember, there is no one rule that's going to win all the time. But often when price is overbought or oversold, so just reverse the logic. But in this case, when it's overbought at the end of the week, there's often a bit of a rally the other way where it moves to the reverse. So I was only looking to go short, to take sells, and that's what I was waiting for. So I got up about 5:30. So I was, making my coffee around about this time, and I looked at the charts. And what I saw here, immediately what caught my eye on the 3 minute, is that there were no other key levels showing except for the H1. So obviously we got, some moving averages, we got our session POC, but all the other, prior month, prior week, they were all completely out of range. And what was very nice about them, can you see they were all below where price was? So that, to me, looking at this chart, the week had been overbought. All the key levels were way out of range, but they were to the downside, which means there would have been, a lot of magnets to pull price down if I did take a sell. And so obviously I did put the picture on. And so really, there was only really the 1 hour levels for auctions that morning. I mean, there could have been big run numbers. Obviously, there were other volume levels in the 1, but I really just focused on the 3. I knew it wouldn't be a smooth ride down. So I got up round about, 5:30, got my cup of coffee. And so I was probably sitting at my desk in about 10 minutes looking at the charts, and I saw price begin to move down. And so again, I just noticed that the H1 levels were going to be the key levels if there's going to be any auction playing out in the 3 minutes. And I think a lot of you would have seen when I put down my winning trades, I love the H1. So what I like about the H1, it's not the biggest institutions, but things like pension funds, medium-sized corporations, they use the H1 a lot. That's been my research, which means you actually got people, pressing buttons, but with huge, lot sizes, enough to move the market. So I was basically waiting. I saw the sell signal. Obviously, I wasn't going to jump in because we were above the H1 high. So I was waiting, and that's what I do. The way I trade is I look, what is price doing? Where's it likely to move? It had rejected the H1 high +1. So clearly, price is moving down, and I was waiting for an opportunity to enter in. And I pre-decided that if price was going to break below the H1 high, I was going to get in and then take an auction down to the mid H1, which is always, you get the extensions are good, but again, the mid H1 and the H1 high, the H1 low, they are huge for price action. So in some ways, it was a simple trade. There were risks involved because we had to get through, the oversold band for the weekly, the inside of the overbought band. But I had confidence based on the fact that all the magnets were sitting way, way down. That was going to pull price down to my target. So there I was just waiting. So here I was up, I was on the charts looking, waiting for price to break below after testing the H1 high. So always look left. You can see, look at all this price action. I always look left. You can see this H1 high was a key level. I mean, look how long it tested it. I mean, this is my normal way of trading. I always tested it there for 36 minutes before it broke through. And when it did break through, it came and retested, shot up to H1 high. And look at the retest. So it retested from there with the little pullbacks. How long was that? So let me get my measurement working. So I'm not going to spend as long on all the trades, but before it broke through, 51 minutes. So, I mean, that told me what is our law? One of our rules is, tested key levels. So H1 was a key level, multiple tests. And then fortunately, when it did break through, there was great confirmation because there were two signals on that candle. That was the 657 I entered. There was a triangle down and there was seller momentum. And it may not be clear on the Zoom, but the candle immediately went to bright. The other thing I was waiting for was for price to break below. I don't always wait, but I wanted price to break below the 55. Which if it did pull back, that would give support. And then one thing I'm doing is I'm always drawing trend lines. So I'm always looking to see, is price going to break a key level? So I had a trend line probably somewhere around there that I was looking for price to break below, which it did. And that's when I entered. So I entered there and it ran down to the target and there was 80 pips. Well, it's showing 75, but it was in my C trade account, it showed 80, which what I got. So it was there. It did obviously in the middle, it did pull back and it did have to get through the mid VB on the 1 minute. So I was expecting a pullback. But I was pretty confident based on the testing of the key level that price was going to hit the mid H1 target, which it did. And I loved how that trade ended. I mean, oh my gosh, I was disappointed there. When that trade didn't hit the level, I mean, there was a huge pullback. From that candle to that candle was a 60 pip pullback. So I was barely in profit. It pulled right back. But I'm also learning to trust the strategy, trust the indicator, trust the levels. And of course, the 55, by the time it pulled back, it was, I think on that pullback there, it was already, looking pretty strong. So there was a massive pullback. I was thinking, man, I should have, I was tempted to close the trade, but I didn't. I was going to wait for this one. And then what I love to, when you hit a good target, there's often a nice big wick. And it was great when it smashed through. So that took quite a long time, that trade to play out. How long was that? That was 33 minutes. So that took a while, but then hit the target nicely. So that was there, and the target was straightforward. So that is a straightforward auction. Tested H1 high plus one multiple times, broke through. And I mean, I don't always enter on a signal, but this one had, two signals, triangle down, seller momentum on the same candle, turning bright, and off it went 80 pips. So that was me on the Dow. Then the two trades actually overlap. So let me go look. Let's go down. Let me turn off. Where we go? Yeah, let me just get to the. Here we go. Here we now on the NASDAQ. Just wait for that to load. So when I was inexperienced, I often used to trade two at the same time, but I realized now a lot. I was gambling in my early days. So I don't trade two trades as much now as I used to. Maybe I've become a little bit more cautious. But I did on Saturday. So occasionally they ran at the same time. So this trade I entered, this one I entered earlier. So I entered this one at 612, whereas the M3 on the Dow trade was 657 was over here. So I was running both at the same time. So here again, I noticed exactly the same pattern that it was overbought on the weekly trade. On the week it was well overbought. And I think again, there was the previous week high there. There were a few levels up there, but also again, a lot of the key levels were way down low. So there were some good magnets. And again, in the range I was trading, it was mainly just the H1 level. So I was waiting also to enter. So I was looking at both at the same time. I got up around, 5:30, made my coffee. So I took this trade quite soon after looking at the charts. So this one wasn't as clear cut because I didn't enter off the rejection of the H1. I did wait. I prefer to be below the 55. So I was waiting for price to get below the 55. And so as it played out, I got an early warning, the seller momentum went off, but then I entered on the sell signal. So I liked this was a bright bearish candle with a sell signal, and I really highly rate these sell signals. If you just look back here, look at look at that buy signal that rocketed up. That sell signal still had a lot of pips in. I mean, it looked like there's 60 pips on that signal. There were how many pips on that signal? 100 pips on that signal. So all the 3-minute signals are very good. So based on it was already overbought. The only levels in play were the H1. So this I entered quite long after the rejection, but it was also I waited for the close below the 55, and I was just mechanically I just used the stop loss on the I don't know if I was tight or not. I just used the stop loss that was generated, which was 27 pips, and again my target was mid H1. So the only level I could see nicely rejected was the H1 high. And you can see there were multiple tests there that 15 minutes, all those candles really were testing H1 high. So the obvious target was the H1 low. So it wasn't ideal in terms that normally I like to enter right at the level. But again, the 55 was there. But I also trusted the signal, the magnets being overbought. And I think there was 60 pips down there. Yeah, 60 pips was what showed in my account after that. So that was that trade, auction market theory playing out. So those were the two took on Saturday. That was nice, 140 pips. So I got more than my minimum weekly target in just on Saturday morning. So it shows if you'd waited the whole week, you can still with two trades, get there. So now we're going to go to trades I didn't take. So we're going to have a look now.
Yeah, before you get too far away from those,
yeah,
couple questions maybe worth noting because it'll be easier to tackle them while we're on the charts. Wendy's one was from the previous one, so I might read that after Mark. But Mark just said,
should I go back to the Dow on the 3 minutes?
No, or just you stay here for a second because it's the same thing. Mark was just saying you have a preference for the H1 levels, but wasn't this also a POC auction? So if you want to comment on the POC, and I'm also worried that POC might have been slightly different at the exact time of that sell signal. You'd have to
replay. I meant the first trade. I'm also with the trade on Wendy's.
Also on the other one.
Yep. I mean, absolutely.
Same question for the other one.
Yeah. I mean, you could have taken this one from the POC down to the VAL. Absolutely. That's what I'm going to point out on some of these other ones, that you have multiple auctions. Vic has asked me in the week, you have multiple auctions overlapping. But for me, I entered this trade based on the momentum generated from rejecting the H1 high. So that's what I decided before I entered. It clearly tested that high level, and I was waiting for a safe place to enter. So I kind of entered a bit late into that auction, but feeling pretty confident it was going to get down to the target. But that would also have been valid. You would have sweated a bit because it did pull back, as I was thinking. It was pulling back, but I know the 55 is massive for resistance or support if you're to buy. But I mean, absolutely, that could have been a valid auction too. So did I answer that? But I just psychologically thought the momentum is being generated by that rejection up there. So I'm in that auction.
You're now looking
at I thought that gave it enough.
Trade previous to that one.
Let's have a look. Let's just go back to
your first example.
Yeah. So let's have a look here. I'll just make it bigger. Yep, that's even better because that closed below the POC. So you can see that did play out. You can see that rejection of the POC. You could have got in, but again, this was in the way. You would have had to wait for that to close below. But that also is a valid auction. Again, it's like my other trade on the NAS, entered slightly late, but clear rejections of you can see the POC there. And it would have been Yatar because I've got the replay function on, so that probably would have been where it was.
I just mean that if you went back to that exact moment, it may have
Yeah.
potentially been slightly different.
Well, let's have a look.
Let's test
just
my
check that.
theory. Let's see.
Okay.
Let's see if it
It's
moves.
going to load again. So I should have put a line there over it. Yeah, it looked like it was higher. Okay, we're going to solve your theory right now. That's where it's sitting.
Yeah. And the
Okay.
VAL is bang on the 233 because that's a projected possible target from that point. So that we don't need the VAH.
But let's just, that I think that did move. You're right. So let's just quickly, it's going to be quicker doing it like this, I think. Yeah, they have moved a bit. The POC.
Not radically, but you can see
Yeah.
they're obviously dynamic. So there is the
Yeah.
potential for change.
Yep.
Yeah.
Yeah, I mean, I suppose, I mean, I've never said this, but psychologically, when I look at the 3-minute, the H1 seems to bully most other things and get its way eventually. When there's, besides the POC, the sessions POC. So that's what I was looking at those. That's my favorite 3-minute auction, is looking at the H1. That's in fact almost all my trades on the 3-minute are probably off the H1. And I simply use when the other levels, like the prior week, there's a prior week high, prior week POC. When those appear, I use them mainly for confluence, because the gap between the prior week, say POC and VAH or VAL, it's so big that they don't often play out in the session you're on. So I mainly use those levels for confluence to get into an H1 auction, whether mid, high +1, to reach another H1 target. So I don't know if I've answered that question, if that all makes sense.
I think so. Having said that, you have got a whole session that you've done for us on the hierarchy of levels.
Yep.
And I'm pretty sure the H1 is... Sorry, Mark?
Don't forget Wendy's question.
Yeah.
So what is Wendy's question? Was that on the NAS? So I'll go back to the NAS?
No. It was on the US 30. Basically, what about... She was commenting on the fact that the sell signal... Like you obviously entered on later on when the candles went bright. But she just said, what about the sell signal that came just before where you are now? That also crossed the H1, and then said, PS, it also appeared to just cross the 55, but then went nowhere. So I just you can comment too. I just commented on it's important to just note where those candles are all closing, because none of those candles closed beneath the H1.
Yeah.
And almost none of them closed below the 55 either. So the story starts to change once those candles all started closing under the 55. And then yours is the entry on the red candle is the first one that actually closed below. So
that's 100%.
I'm not sure at what point during the candle you entered, but that's how I look at it. But I don't know if you want to have anything on your end too.
No, I mean, I'd like to be on the right side of the 55, or at least I want to be on the right side of the 55, or at least be in a profitable position that if it does reverse, I'm got I'm +2. I've locked in some pips so as not to get stopped out with a loss. So I mean, that was right on the 55. So there's a high chance of a pullback, which it did. So you wouldn't have got stopped out in that signal. But again, the thing was, I was looking at the H1 high and looking for that to close below. And so I waited, and as this went bright green, the signals plotted. I mean, I can't remember, but I entered, it would have been towards the end of the 3 minutes while this candle was plotting, because it was bright and there were two signals. So that made it high probability that it was going to move.
I mean, you can get a little bit, further confirming that you're in an
question, Ty?
I think so. She was just saying again why, but the candles did close below the H1. I mean, when the only candle body I can see under the H1. Oh, wait, are you talking about the bright red cell signal further left? Sorry, I'm looking at the wrong signal, Wendy. There's another one further left, to the left of that buy signal. I can see that.
Yep.
There is that one. That was at 521. I mean, let's have a look. I haven't really been looking there.
Yeah, I was not.
I mean, the negatives there are that the angle of the 55 at that point is still against you. Quite strong. That's the one thing I would say that would prevent you from wanting to take that one, and how strong that rejection was prior to that sell signal. Like, look at the size of that wick.
I mean, I've realized I needed a whole session on wicks. That wick alone, look at the size of that wick. That spells danger. I'd never enter a sell with a candle with a huge wick like that. So what that means is buyers are sitting in this zone yet, and you can see that's why you can see what happened. I mean, price rocketed up after that. I mean, my alarm hadn't gone off yet with that candle, but that was a massive wick there.
Yeah. Sorry, Wendy, I was looking at the sell signal directed
That
to the
one over
left.
there.
That one. I didn't see that other one that was there, so that makes complete sense now. Wasn't answering your question properly at all. Sorry about that. But hopefully, yeah, there you can touch on that. And obviously the 1 minute chart's going to give a little extra info too.
Yep.
Behind that. But what I draw from this, looking at the top, look at how that white candle and doji reversal pattern rejected the H1 plus one.
Yep. That
And
over
it
there.
did the same rejection to the left at that other major high to the left at like 1 a.m. Like look at that exact high, the height of that wick. So you've seen price now reject that H1 plus one twice, and you've got that doji reversal pattern on it to the right with a white candle. That would be a very risky entry, but potentially valid up the top on the right because you've come away from the bands on that. The 1 minute chart will give more info as well, but that just kind of further validates which auction you're in, the way that price is responding to those H1 levels. Anyway, back to you, Dad. I think.
Yeah.
So Ty,
yes.
How is that a risky entry? You've got a rejection twice with that pattern, and usually that pattern is also a signal. You got a white candle over there, and both times it plummeted down pretty hard. So
it's just risky based on the size of those bullish candles to the left. So look at the size of those two green candles.
And yeah, but
those
candles must have represented something odd.
Yeah, I mean, just measure top to bottom, Dad, because they're pretty big.
Okay, they would have opened actually on the low of this.
Yeah, so to the top of the wick. So you're dealing with 140 pips there in those 2-3 minute candles. That's the only reason why I would look at that as quite risky.
Yeah.
But it is still, you have got a white candle, you've got a reversal pattern. I'm never trading off the 3 minute chart alone. I'd be looking at drawing more information from lower time frame, like the 1 minute.
The London high also, there were London highs, that gave, I mean, it could have been, you could have, because there was confluence. But I was only sitting down with my coffee and absorbing the atmosphere.
Yeah. Well, definitely the potential right there.
Yeah.
And that's the hard part when you're used to, waiting for trades on trend, because that is a reversal. Like you're at the top and rejecting that other, what looks like a monthly level on that 1 minute chart, right? So, yeah. All right. Well,
cool.
Whatever you've got next there, Dad, I'll mute myself.
Okay. So I want to next go to, I want to have a look at what the NAS was doing on the 1 minute. So I'm just looking really at Saturday and Friday morning's trades when I'm on the charts, because that's kind of when I'm trading. So I want to look on Saturday on the 1 minute on the NASDAQ. So let me blow that up. And let's just see, let's put where am I looking now? This was very interesting. So here we go.
While you're finding it, I forgot to mention on your previous trade that there was a nice head and shoulders pattern as well that played out across, I think, 2 hours. And you entered after the right shoulder had pretty much broken the trend line, which we didn't even, I think, say, but I think that I remember seeing that on the first one.
So I want to just look at the 1 minute here and just let the levels load. So this was the NAS at the same time. And this was what the NAS was looking like. So I got up around about here, got my coffee. But if you have a quick look, I mean, I just thought, count the auctions. I mean, it was amazing what played out here on the NAS. That's what I like about, that's why, I mean, I think I told Ty, I used to get up at 5 o'clock, now I get up at 5:30, because you can trade both ways. So I found out that I can get an extra half an hour sleep, and we're not waiting always for the trend, because we're trading off levels more than off moving averages. But I'm seem to be getting plenty of trades between 5:30 and 7 most days of the week, not every day. But I just had a look at count the number of auctions here, just on this page alone. There are so many opportunities to trade that I had a quick look this afternoon and I counted 5 different auctions playing out on this one page alone. So I'm going to go through all the 5. So let's have a look at number 1 is the 15-minute auction played out. So you can see here, look at this. What I love is when you've got this, and I was aware of this. I mean, I can't remember everything from Saturday. We had, I'll just stretch it out. We had the M15 high overlapping the London high. So that is a dynamite level because the London high, oops, where's it gone? The London high is massive, as I always say, and the London low for that matter. But it often seems when I get up, it's the London high is always in play. And often price, tests and then rejects it and reverses or it accepts. And that's the trade that I took, a week or so back. I took a close above the London high, but they were overlapping. So that made that quite a solid level. Plus you've got the overbought now with a little update, overbought H4 pivot. And so price tested around this level quite a few times. And then you would have to have held your nerve, but that went all the way from the H1 high, from the M15 high, all the way, look, it came right down to the M15 low. So M15 high, all the way down, M15 low. That was a big auction, 154 pips. So who took it? It was Martin. It took that, I think he showed that a number of weeks back. So that's why we've got the M15 range in our strategy, not for the break above, which can be iffy, but actually for when price trades between those two levels. It does that from time to time, and they're normally very big trades. So that was the first auction, M15 high, all the way down to the M15 low. That played out. Second one, obviously there were a lot of volume bands at play here. So look at this other auction, number 2. In fact, there's 6 auctions here. Look at our overbought from our H4 pivots. Look, if you always look left, look at price. If you look left, look at price testing. This is the red band here, testing all the time. And here we got this wonderful cluster where price is not only testing, rejecting London high, M15 high, but we've also got our H4 pivot through. And so there was a clear test there. And look what happened. From our overbought band, price dropped all the way down to our pivot upper volume band, UVB, 160 pips. You can see this orange line here came right down to that level. So that was auction number 2. Auction number 3 would be between our session bands. So you can see here price moving between, just the straightforward bands, upper volume to the mid volume band, 45 pips. So when I do like signals, I think I said this to Vic as we were chatting in the week, is when you get a signal on a band, they often can move nicely. So we can see price came down, made its way down. You can see this big wick, boom, it's nice when prices, that wick was really hitting that target right there. Then after some tests again, you get a sell signal. There was this bit of a big candle, but you can see price went all the way between all the bands. So there were other auctions playing out there, all the way down to our oversold band. So that was number 3 or 4 in the list. Then also don't forget, often we forget big round numbers. They are completely valid auctions. So here we got 29,600. Always looking left. Is 29,600 a key level? Absolutely. So that's my trading style. Look at all the testing there. A lot of this is around the big round number. Not so clear over there, but you can see how price reached up, and here you can see price action around 29,600. So a lot of tests and rejects, and it goes down to all the way down to our big round number, 29,500. There was 84 pips in that trade. So that was I think I'm on number 4 or 5 already. Then let's forget if you woke up late, you came late to the party. Look at our price came down to the prior day value area high. Look at all these wicks here, testing, not breaking through. Finally, you get a First candle closing below. There was an auction from the prior day. Oops, I've pressed the wrong button. From the prior day, value area high down to the prior day POC. Not as big, but still there was a 53 pip trade over there. So that was number, I don't know if I'm on number 5 or 6 already, Ty. And I think that was it. I think there were 6. There were 6. There were about 6 auctions just in that space. So there's no lack of auctions, So learn to identify what price is testing and rejecting. But it does take, what's the word? Guts sometimes, because these auctions play out, but often they do have big pullbacks, especially if the moving averages are not aligned. But what we've discovered most often is that these levels bully the averages. So again, some of this pullback here could potentially be attributed to, the moving averages weren't nicely aligned, and they're in there because they do obviously carry a lot of weight. But at the end of the day, they get bullied even through the big pullback. So I'm also learning. I mean, I'm a conservative trader. I don't like pullbacks. All of my trades, Ty knows, but my style has now changed. All my trades used to look like those runs. But you can see some of the ones I've been posting, like Saturday's trades, there were some big pullbacks. Because I'm also learning to trust the levels. Sometimes it seems too good to be true, but the whole strategy works. So it's just identifying levels. Gee, the time's gone quickly. With any questions there, Ty? But I thought this was a great example of, 6 or so auctions playing out. And even then you can sometimes it's not a strong auction, but when the moving averages are not aligned, price often moves between them. So here we can see, price moving between, the 233 and the 55. And you can see that there was a pivot here, but you can see the 987 clearly looked like it was a target. That's why I've got the key ones in. So you could even almost add that as an auction, but the big money doesn't follow that so much. So that's not always going to play out, but it can often be valid, trading between the moving averages if they're not aligned.
Very, very cool.
So I've
no
got
other questions, guys. Drop them in there if you've got any while we're here. But I love it, man. How you just identified all of those different auctions at play.
Yeah, well, that's what I'm always looking for. When I get on the charts, I'm thinking, especially if you get in late, I've only woken up here. Where am I? Actually, big round number. Look at all that testing over there. That could get down all the way down to the next big round number. So, I'm always looking. And these ones also, the prior day ones, sometimes you don't see them at all. But when they do pop up, they always are relevant. Sometimes they may not be the target, say it rejected the prior day value area high. Sometimes the POC may be way out of range, but it can add confluence. It may overlap with a London high or some other level, and those trades always move. So the prior day values are huge. Anyway, let's look at another one. Let's just go back. We got a bit of time, have we, Ty? Yep.
I'm just thinking, while you find that, like practically, I'll just speak out an idea I've got. Like even with these auctions, like having your own personal list, like writing down the list of all the auctions, whether it's paper or not, I think it might be easier to have it like a little digital note. Like I know with Apple Notes, you can have things written out like a little tick box thing. And then as you're spotting them, you just tick those little boxes and it's going to automatically highlight amongst the list which ones are in play currently. So it's that much more in the forefront of your mind, which ones are at play when you're looking for them and actually ticking them or unticking them. If you tick the wrong thing, it's quite easy to visually have that in front of you and remind you when being sucked. Because ultimately, guys, we're trying to manage our emotions in the midst of sometimes sitting on our hands. And if you've identified the auctions, it's going to potentially keep you out of jumping in at the wrong moment. And then it's also going to help you identify what the most likely next target might be. If price has just rejected a cluster of certain levels representing a certain auction. Anyway, Dad, looks like you found something.
Yeah, this was just the NAS. All I did, I just looked. I mean, I thought I was going to have to trawl back through days, but I just looked literally on Friday and Saturday on the Dow and the NAS over 2 days, and there's just like it was just stacked with different auctions playing out. So, what have I got here? Just let me just look. But I've also got the let me put on the M1 here. So this was on Friday. I'm sorry, I'm biased. I know some of you trade at completely different times of the day, but I'm just biased towards when I get up. So I just look for trades when I'm up in the morning, the time I like to trade. It seems to work well for me. But if this is just Friday now on the NAS. And so also again, look at what's happening on this page. Also quite a few auctions playing out. So you can see here, you can see why we got our overbought H4 from the last H4 pivot, overbought H4. I'm always looking to see, always look left. I say that all the time. What is priced? If price goes straight through, for example, if price had gone straight through our overbought band from our last H4 pivot, not a big factor. But again, look how price took a while from that wick there to the final bullish move above, 18 minutes it took to get through. This is on a 1 minute chart. And again, look here, all this testing here for the overbought H4 pivot, a lot of testing. And so we can see this auction playing out, price rejected eventually. It dropped all the way down from the overbought. That's not a massive trade. Well, still, that's a good trade. 70 pips just going down to the next band. So between the pivot bands, you can see there's an auction. Likewise, you can see another auction playing out. It is risky taking, I don't always take a lot of trades from the 1 minute overbought band directly, because inevitably when it's overbought, often there's moving averages in the way. I like to be on the other side of the 55. I do take them if there's a lot of confluence, but in this case, sell signal, but not a lot of rejections up there to be confident that one is going to move. So what else I wrote down here? What did I also like here? Obviously a clear move. Look at this. We've come through the upper volume band, test, reject, came back, and then a nice big bright candle closed below, and that one flew down 82 pips to our mid VB. You can see as well, we can see price also coming down for a test of the Friday Valley area high. Also, a bit of an auction playing out over there between those two. What would have been safer is this what caught my eye, and I didn't take this trade, but look at this nice cluster over here. So prices rocketed down with bright candles. So that means there's a lot of momentum, but it couldn't get past this little stack over here. Prior day POC. Remember I said on the previous screen, these prior day levels are massive. We don't often see the auction play out, but they are massive for confluence. So look at this. Price couldn't close below our mid-volume band and couldn't really progress further than the prior day POC. Plus, we've got our 987. So that to me is a beautiful stack. There's, what's that? 5 or 6 candles, couldn't break lower. And then we see this trade playing out, more than one auction playing out here. We can see the obvious auction was mid-VB, back up to the upper volume band. There's, 90 odd pips there, but this was also an auction. We can see prior day POC, and we can see it came up to the prior day value area high, and there was a little test there to show that definitely was an auction. Some people did take their money, set their orders, took their money, but nevertheless it went up to the upper volume band. So it was nice just to see those auctions playing out. And at the same time, on the 3 minute, we can see some auctions playing out. We're almost running out of time. So let's just blow up our 3 minute chart. Now, normally I'm looking at confluence with both, but it's easier. It'd be too noisy. So I was looking here on the M3. What I liked looking here is look at this prior week POC. So again, these prior day, prior week, they don't often appear, but when they do, they carry a lot of weight. So we can see this auction played out nicely. Prior week POC, and look how it gapped up to the prior week value area high. So that produced a huge move. You can see a bit of a head and shoulders, not perfect. It's got like a double head, but like a bit of a head and shoulders pattern. But we can see this one absolutely gapped up. So we can see all the confluence down here. We got the 2584. It doesn't appear often, but a double bottom on the 2584 and 987. A lot of testing. Look at this testing. Can we go further back? So that's going too far back, but just what's in play from around the open, 987 massive, and we're sitting on our prior week POC. Plus, we've also got the prior week mid, and we've got our upper volume band. So, I mean, there was a massive amount. This is massive amount of levels. We also had the mid H1 that would have come on already. So, I mean, you got multiple levels. And that is the reason why I wanted to show this one is that would have been, there's like massive volume sitting there just waiting to explode. And so when finally, I mean, you could have chosen an entry point. That one gapped up, I mean, up to the prior week value area high. There was 200 pips in that move. That was before I was awake. But again, multiple auctions. We can see here mid H1, rejection there. It went up to the H1 high, went up to H1 high plus one. And look at how that move ended. I mean, you cannot, that is just perfect. This H1 auction playing out, that was massive. So that 200 pip move was largely because of that is heavy level stacking. Okay, it is very noisy. We've been hard to have, to pick the candle to enter, but that was huge. So that one really played out nicely. So Ty, I mean, there is one more, but I don't know if I've talked for too long. We've gone through a lot.
No, you're good. I'm just trying to. Wendy's got a question there again, referencing again about the buy before it. I'm just trying to identify which one. Maybe if you can comment on.
Yep.
And PS1 once it crossed the 233. Yeah, I mean, if you were taking the signal on its own before the 233, I don't know where the projected targets would have been.
Yeah.
But yeah, it depends. If your stop loss was beneath the wick to the left, you wouldn't have been knocked out.
Yeah.
So that buy signal may or may not have still actually played out to its targets. But yeah, crossing the 233, you might have gotten in at that point, which would have been quite late. Yeah.
Those are very valid questions because I've always said it is so easy to look back. I mean, someone who's been on with us for a few months could probably analyze this trade. And it's good questions to ask, but what about that signal there? What about that signal there? Those are valid questions. And there are reasons not to take them. I mean, the 233 is one. But what I've realized is that sometimes you do need a bigger stop loss with the strategy, Where is the main volume sitting? Well, it's definitely sitting around, That prior week POC was big. And also the 987. So, entering early, even with this candle would have opened over here. I don't know when the signal would have plotted. Even that, I mean, there was still 70 pips. I mean, there was huge volume on this day. I think there was optimism about the outcome of the war that sends the markets up. So even though these trades pulled back, I mean, this buy signal here, I mean, there was still, 44 pips, in that trade. So it wasn't like they were nothing. But I mean, the safe breakout would have been, a close above, the 233. This buy signal here would have been the safest to take if you were waiting for some clear space.
Yeah, and I'm trying to think of them quite objectively too. So, but like that buy signal itself is also showing up. Like remember that one's on the band, basically, or just above it and above the 233.
Yeah.
Other ones that don't tend to go.
That's risky there.
So that one's heading into a band. It may have just closed on the other side after that. Yeah, it is tricky in that sense as to which ones. I mean, this is the other thing too, is thinking a little less about the signals on their own. Remember, they're more confirmation. And so if you're not looking at the signals as such, because if you're looking at that buy signal that's below the orange upper volume band, once it crosses the 233, that's a very late point to enter in itself, because at that point now you're far away from the buy signal. If you're referencing the buy signal,
you're 100 pips away from the source of that move there. If you're entering on that candle,
and you're also at that point above a few things, but also kind of in not no man's land. Like there is the potential to bust out there, but there might have been almost a trend line break, but looks like more of a rejection. If I'm looking left, what would have been a trend line coming across, it looks like it hadn't, I don't know, crossed above it yet. Depends on, I'm just looking. Yeah, that one might not have. Yeah, so, go down to there. Yeah, that wick there, because those signals, you can see there, you would have probably had that on your chart at the time. And you haven't yet broken that trend line with that signal. So there's so many different things to be analyzing around it. But I love it, Wendy. I really do. I love looking back and asking the question, why wouldn't you take this? Or whatnot, because that allows for a little bit more of helping you which ones to take or not take. Ty, when would you have entered after the rejection without the signals. When would you have entered? Well, that trend line in itself, structure-wise, I mean, it's also a bit more of a channel. I'd be drawing the channel because you could draw that across the top and drag it back down, and I can see already that there's another that left-hand bottom touch.
Let's have a look. Let's do that.
Anyway, it's one of the, and I'd be looking at a lower time frame as well. But it's okay. So that you'd have that there, drawing them down to at least encompass the bottom. Yeah. So they at least like that, and you could maybe even take it lower based on that left-hand side. But I would have something like that. I'd be looking at what price is doing in between those zones. And then, yeah, look, guys, I haven't been trading a whole lot right now with doing this web stuff. So I'm not highly tuned at this time. But, I'm seeing a double bottom there, right at the bottom of the move. And like Dad said, you're actually observing a lower lows and then you're observing a higher low. And so you're getting what I would call a very ugly W, but it is still a double bottom on the 2584, which is a pretty powerful moving average in itself. Like, this is the 3-minute chart. I don't primarily trade off that. I'm always looking at it, but I'm always looking at a lower time frame to get in on. Sometimes as low as a 10-second chart, which I'm not going to recommend for anyone when they're newer. But that there in itself, observing that kind of structure, rejections off that moving average, but then also, like Dad's identifying the auctions is the much bigger thing. But structure in itself, and honestly, I'm also looking at a MACD, and I still, and when Dad and I talked a lot about this, I can definitely see room in the future for bringing some deep trainings on divergence, because ultimately they help a lot with rejection of lines and anticipating when price is more likely to actually reject or continue. So that's something a bit more. And so I'm always looking, like a MACD still tells me a lot. And, but yeah, without the signals, just purely looking at signals right there, you're still dealing with a channel or a trend line. And so getting in on either of those buy signals that are kind of in the middle, like the middle of that channel as such, you're playing within a channel very clearly, but you can see that one later on, and this happens over and over and over again. Whenever we see the buy signal show up when price is closed above a trend line like that or a channel, and what also looks like above a bit of a cluster. There's obviously a lot of levels now just beneath us that we've rejected. That's then when those moves tend to show up. So yeah, don't ever negate drawing at, like, turning stuff off before you look at any indicator, guys. Just look at structure and draw some trend lines or channels, because that's going to give you the structure that you need before anything else confirms what comes next. Hope that helps, Wendy. But I'm seeing the rejections. I'm seeing, that ugly, it looks a little ugly in the terms of the double bottom, but I guarantee if you go up a time frame, that's going to look more and more like a head and shoulders, because the bottom low is quite central between the left shoulder and the right shoulder. You can kind of see it a little bit more there.
Yeah, it's the 8-minute chart with the shoulder.
Yeah, so from there, you've got a left
shoulder.
You've got the head. I mean, a 15-minute chart will actually probably look even smaller and even better. So yeah, so you've got shoulder into head, and then up it goes, and then into that shoulder there. And obviously it went higher, but that's, and just got a 15-minute chart, Dad, for kicks, because the higher the time frame, the pattern and whatnot, I think you're still going to observe it there. So you can, and a high Kanashi candle's a little harder to see it sometimes, but still, you are looking at a reverse head and shoulders pattern, and you're coming with a trend line break after that pattern is usually a very high probability pattern. So I'm looking at that stuff before I'm looking at signals, for sure. That's something I'm constantly rather looking at structure, drawing, and seeing what's going on, and then looking, okay, now we've got this auction playing out, these key levels, we're in between these volume bands, and then find the signals, like I said in the beginning, reading those rules, the signals are kind of like the final cherry on top, not necessarily, and Mark's commenting saying, impeccable drawing, Dad, much better. You've improved with your freehand drawing.
Oh, thanks, Mark.
Yeah. But I hope that answers the question about Wendy. It's
we have a cartoon here in the Netherlands that is just, it reminds me of that, and it's really bad. So a dirty mind is a joy forever. I'm sorry.
Lucky you, Mark. But yeah, those channels, guys, structure, patterns like head and shoulders, because a head and shoulders is to some degree also like a triple bottom, but with a lower center. It's still it carries more probability than a double bottom. But the lower time frames, you're seeing a double bottom within that higher time frame pattern. So yeah, I'm always going to be zooming out and looking firstly for structure, looking for patterns. I mean, I'd be zooming out even further and checking, is that big zone of range, is that sitting within potentially a 50 to 61.8% zone of a pullback from a previous move to the left? I'd be drawing a fib and identifying that entire zone potentially. And yeah, just always working my way from that zoomed out perspective all the way in to then like this. Again, the signal is the confirmation. There's definitely power in them by themselves. But if you're leaning towards following those, then it's a case of playing the game of which ones to ignore and which ones to place more value on. And structures are always going to be the big help with that. So,
and we'll let a little bit of the cat out the bag. When we have a live event that we haven't set for, that would have been a bright signal, and none of these other signals would have been bright. So that would have been nuclear bright. And none of these other signals would have been bright on this page except for that one.
We'll see how many of you can figure out why.
That bar would have been bright. That's going to be bright when you do our live event, when you get an update.
Yeah. Very cool. I love it. All right, guys. Well, we've gone
there we go.
a little beyond 9, but I think it was cool. I really, honestly, Wendy, I love that kind of questioning and looking and objectively looking at it all. Marcus says above the 233, you might be onto something, bro. Maybe there's a man with experience.
And a few other things too.
Definitely a few other things. Never that simple, but that is a key point right there, is that you're above the 233 and it looks like the 55.
Yeah.
Crossing and bright green. So plenty of things there. I think there was one question, I think Fani put it in our messenger chat, not in the Zoom. He was commenting on the signals and how some reach TP 1, 2, and 3, not necessarily at the time of the signal, but an hour or so later, and just wondering why. But yeah, it's a little harder. I mean, the stop losses and the TPs 1, 2, and 3s, they're guides. They definitely can carry some accuracy if you're going to go back and measure and test and come up, like follow that back testing thing that we did in December, where you will then begin to have your own data on them. But yeah, you will notice with this setup more pullback. I mean, I don't know if you want to answer it, but I'll read it perfect. Open. Often the sell buy signals don't reach TP 1, 2, and 3 on the signal. So I guess what he means is in close proximity to the signal firing, but an hour or so later they do. Just wondered why. Not sure if you got any commentary on that.
I'm not sure I understand the question. I just think it's they plot and then the market goes into range and takes a long time to reach the target.
Yeah, so you can see, I mean, you've got some sell signals there that some may have reached their targets. It's hard to know exactly. Most of them don't look like they went very far. Some of those buy signals, though, experienced pullbacks, but I guarantee ran to their targets based on how that final buy signal played out. It's just a case of where you're placing your stop loss and then how much you believe that you're in the right auction, but maybe just a little early. But yeah, again, guys, trying to get everyone to think less about placing the signals lower down the list of hierarchy. I hope I've said that correctly. The signals are there. They confirm some things, but they should kind of be the cherry on the top, as opposed to just looking for signals and running off those. They're definitely not the main driving factor here. But yeah, anyway.
Cool.
Thanks, Dad. I really appreciate that. That was cool and creative. I like that. Looking at spotting. Now, guys, the real deal here is if you really want to get good at what you just learned from the previous hour, your homework is to actually go and look at a chart yourself and start identifying and spotting the auctions that you're in. So yeah, that's what's going to cause you to actually have this massaged in. Dave says maybe change the label so not buy if it's just confirmation. Yeah, could do. I mean, it's still it's the same thing kind of with the wedges or the triangles. It's still an element of there is momentum in this direction. They're each telling us something different. We've kept those on there specifically because they're helpful for identifying which ones are which when you've got three different things pointing up or down. And having the stop losses and TP levels, they're also very helpful from an education standpoint for a guide. Like when you're trying to explain to someone who's brand new as well, measuring out, and you'll see in the videos coming in the website for TradingView, how to position a stop loss and a TP, like without having some form of visual on a chart, like without being able to put my hand on the chart and like a whiteboard, having those levels there are very helpful for that standpoint. But it is just learning to treat them differently, if that makes sense. And like Dad said, there's some updates coming that'll be able to show you which ones carry more weight. So yeah, hope that helps. Lisa in South Africa says, nice example. Learning all the time. Love it. Thanks, guys. All right, well, we definitely have marched on longer than usual, but I love the questions.
Good questions.
We could talk for hours, Jeremy, indeed. But yeah, I've still got a couple hours worth of fun editing and uploading and YouTubing and all that jazz. So yeah. All right, guys. Well, thanks for tuning in live. Thanks again for coming in with some creative stuff. I really enjoyed that. And yeah, Mark's going to set up that checklist, he said. Great help. Cool. Go and do that, guys. That might be a cool idea when you're approaching the charts to start asking yourself, which auction am I in? And if you've got a list of all of them, and then you start ticking the ones that you're seeing, that's going to further reiterate later on during your moments on the charts, which ones to maybe be aiming for, etc. So very cool. Thanks for the encouragement there, guys. We will wrap up the evening there. Trey, let me figure this out, Dad. If you can unshare, we can both sign off at the same time. But yeah, thanks for tuning in live, everyone. If you're watching this later, I hope you enjoyed it. And send us some questions. Send us some ideas of what you would appreciate in future trainings. I love it how Dad can get creative on always coming up with something, but we want to scratch your itches. So if you've got an idea, something specific you'd like us to train on, touched on something there with the wicks, so maybe there's an idea for us as well in terms of the shapes of candles and how they respect levels. But otherwise, hope you have an amazing week. We'll see you bright and early for Thursday morning's live analysis. In the meantime, trade safe, and we'll see you soon. All right, good night, everyone.